Welcome back to Stop Weekly Market Update. My name is Meno Labro and here with me Mr. Amidian and also Mr. Summer. So let's reveal the financial market update.
Despite that war between Iran and Israel is looming on the doorsteps, they suddenly decided to cease fire for a while, and financial markets are acting pretty much normally to what's happening around the world. This is pretty unusual. Usually when war is there, financial markets become very volatile. However, we found a big retracement in gold, although it's still on the title. So let's see how technically that's performing.
FOMC participants decided to keep the interest rate unchanged, and we got the latest economic projection by the Federal Reserve. It showed higher than expected unemployment rate and inflation. On the other hand, we got lower than expected GDP. So it helped the financial market participants to count more interest rate cut by this year.
Hello everyone, welcome back to another weekly market update from Zalisar Institute. My name is Samir Raslan, I'm a senior technical analyst at the Institute. And today we have the same markets as usual with different style. We hope you like it. So looking at gold for a start, despite everything that's been happening in the background between the looming war of Israel and Iran, we have a ceasefire. So the war caused the price of gold to retest the resistance of all-time high. And after the ceasefire, along with some bullish fundamental reasons on the dollar, it has pushed the gold down. Now technically, we can see that the price has broken below a trend line of an ascending trend, right, or an uptrend. So after this break, market actually broke below the support and made a retest. So we can expect a continuation in a downtrend in an optimal way, reaching or testing the support or the demand zone, as you guys can see. And this demand zone actually goes below the zone drawn because of how volatile gold can be. So keep that in mind. However, this is what optimally it should be considered as when speaking of gold. However, if we look at the break, we can see a sequence of weakening bearish candles and also somewhat of a descending movement here, which gives us a weakening or understanding that this bearish movement is not as strong. Now keep in mind that this war is still looming. They only seized it for some time. And technically we are having this very big bullish green candle, which is very solid from a support on gold. Now, third factor to keep in mind is that gold right now is also in the middle of somewhat of a channel. So it has bearish reasons and also it has bullish factors, reason for whatever catalysts, right? So wherever you may decide to go for next week in gold, be very cautious about shorting or longing. Make sure to follow risk management because it is very shady right now. And remember guys, you want to be profitable in markets, we go for opportunities. We don't just trade because we want to make money. No, we wait for an opportunity, then we go for a trade with that. So this is about gold for the upcoming week. And right now we're going to move to another instrument. All right, now going to EURUSD. We can clearly see that EURUSD is moving up in an ascending channel. Now from here, market moved down to the lower trend line of this trend, touching it for the third time. And from here, we got confirmations where price should be continuing to go up. Actually, if we look at it on a wider view, this also can be giving us some sort of bull flag movement. Now, this is not a certified pullback because the pullback is very big. However, it still reflects the same ideology of traders when they are putting their decisions into forming candles and market patterns, right? And we got a confirmation on a trend line. We could see people are interested into entering bull entries or long entries on EURUSD. So we can expect the market to go up to this resistance. Now, this is an inner resistance. Usually the trend should be continuing to retest the upper trend line. So this movement is high probability, while the second movement, it will have to be compelled because EURUSD is playing a vital or getting reflected on vitally by what's happening with gold, as the Americans want to keep in consideration what might happen to the dollar with their decisions within it, right? So from here, we have two possibilities. Markets can consolidate, or there is a good possibility that it would continue going up do for a retest and retest the trend line. So we'll see how this goes. This is about Euro USD. Now going to NASDAQ. Now about Bitcoin, it's as interesting as always. We can see that Bitcoin actually has reached an all-time high, and that's also post-war. Of course, with gold, it goes up to new levels. Now, Bitcoin is moving within some sort of falling wedge. So we can expect Bitcoin to continue a further fall down, right, to, or perhaps we could see something like this, fill in this gap, and then going to the support of approximately 100,000, and then we could see a potential breakout to the upside and going to the level of 106,000. Now, it's true that we have a lot of liquid below the level of 100,000, 101. Still, the indicators, not the technical indicators, all indications when it comes to factors, reasons, catalysts are indicating more of a potential bullish entrance soon enough on Bitcoin, just due to the same reason why people would also buy gold. So we could find this pattern happening pretty soon. There is only one technical reason why it may actually not continue falling below, right? Or which also backs up the analysis the same way, which is the demand we could see clearly in this range, which also makes sense due to fundamental reasons. So this is about Bitcoin. Now finally going to Nifty50, and here we switch it. Now Nifty50, as you can clearly see, it's been consolidating within the range of 25,200 and 24,500. So we could expect a further consolidation until the vision for investors are more clear of what's to happen next in financial markets. So this will be it for this week, and good luck with trading.
Greeting everyone, hope you are doing great. I'm Amedian here. I'm senior fundamental analyst at Xylus head office located in Dubai, and today we are going to talk about the most crucial aspect of financial markets, which is fundamental. I want to kick it with the economic indicators. Last week was very crowded because we had the central banks meetings from all around the world, such as Bank of Japan. On Tuesday, we got the Central Bank of Japan, and we will dive into this one also. So later we got the monetary policy meeting, or better say the Fed fund rate, and the FOMC meeting and plus press conference on 18th of June. And also, by the way, we had the SNB policy meeting, or better say the Central Bank of Switzerland, and eventually we got the meeting of BOE or Bank of England. So also we had some other economic indicators, such as the CPI of the United Kingdom, such as the retail sales, core retail sales for both of the United States and the United Kingdom again, and we will talk about it in more details now.
Let's start with the Federal Reserve. The Fed held the interest rates steady last week, but signaled two potential cuts by the end of 2025. Growth forecasts were downgraded to 1.4 for next year, while inflation is expected to stay elevated near 3%. It's the latest economic projection, and the dot plot for the unemployment rate. Unemployment is projected to rise to 4.5%, reflecting a softer labor market outlook. Despite inflation concerns, the Fed remains data dependent amid growing economic uncertainty. The next one was about the US retail sales. US retail sales fell 0.9% in May, the biggest drop in 4 months, led by weak auto and gas station sales. And on the other hand, the core retail sales rose by 0.4%, suggesting underlying consumer spending remains stable. The Bank of Japan kept the interest rate unchanged and slowed bond tapering to support markets. Governor Wanda signaled caution with rate hikes possible if inflation stays high. The Bank of England held rates at 4.25%, signaling caution due to sticky inflation and global risks. Market reacted positively, and gilt yields falling and the pound weakening slightly on rising rate cut bets. Investors now expect the first cut in August as wage growth slows and economic data softens. The UK retail sales was the other economic indicator. For the last week, UK retail sales fell sharply by 2.7% in May 2025, marking the steepest monthly decline since December 2023. This downturn reversed the gains of the previous 4 months, driven by reduced demand in the food and household goods sectors. From the geopolitical side, France and other European nations are pushing for a ceasefire between Iran and Israel, urging immediate de-escalation. Iran requested Israel to stop attacking before engaging in talks, while the US remains cautious about supporting a ceasefire.
So for the upcoming week also, it's going to be crowded and packed because it will start with the PMI, or basically Purchasing Managers Index from the different countries such as the European Union, UK, and United States. Later on 24th of June, we are going to get the CPI number for the Canadian dollar. And at the same day, we are going to get the BOE chairman speech or Billy speech, plus the first day of Jerome Powell testify on 24th June. Later on 25th, we are going to get the CPI number for the Australian dollar and the second day of Powell's speech and testify. And eventually on Thursday, we are going to get the Bank of England Billy speech again, plus the final GDP numbers for the second quarter in the United States 2025. And by the way, we are going to get the most crucial and important inflation gauge, which is PCE, and is at the center of attention FOMC members and market participants next week. Stay tuned. See you next week.
Hope you got the valuable, insightful information from our financial market analyst.
Thank you for watching. Don't forget to like, share, subscribe, and comment down there. See you in the next one.